Late Night Fix. Hopefully, everybody's having a good evening tonight. Wild day out there today, man. We got some more news tonight. Russia is let's see if you guys can see this right now. So, how's everybody doing? We doing good? Who we got in here? Make yourselves known. Let's see. Oh, we got some slackers in here. Guys, again, this is a public stream, so if you guys wouldn't mind hitting that like button on the stream over here, but we got some crazy news that we got to go over. Let me pull this up really quickly here. We were talking about this last week, which is pretty interesting. So we have Russia issues new nuclear warning to Ukraine and the West. Uh-oh. So things are heating up in the Russia and Ukraine conflict over here. So it doesn't look like anything is going to get resolved in the near future, which again was pretty obvious that wasn't going to happen unless something crazy happens. You have basically Nord Stream getting attacked, natural gas leakages coming. So you could see an increase in natural gas prices over honestly for the foreseeable future. I mean, you've seen natural gas act pretty volatile over the last 6-7 months, man. Commodity prices have been crazy, so it might be time for some more natural gas. SPY's at some crazy levels over here. We're about to start getting into earnings season in a couple of weeks, which obviously is not going to be good. We had the first decrease in home prices in like 12 years. Bond yields are going crazy. The dollar is exploding. The currencies are all about to be one for one. You're going to have the euro and the pound also equal to a dollar, which I don't think has ever happened. Crazy, man. Those pipelines being busted was a big signal. Yeah, dude. It's crazy. This is all not, it's a lot of craziness over here. So, guys, again, as you guys are coming in here, make sure you guys hit that like button on the stream too. Helps out get these streamed out to some more people over here. And again, shout out to the 1348 gang. I know you guys are all in here with me tonight. Hey, Jack, can you say hello to my friend Stephanie? I can't. She has to listen to you on the way home with me. That sucks. I'm sorry, Stephanie. Your boyfriend's listening to a kid that sells crack on the internet. So, you can pick them. I'm just kidding. Shout out to Stephanie, Casey's girlfriend over there. That's sweet. Team's all here. What's up, everybody? And if you guys do want to come join with us, let's see. Here's the link right there, guys. We'll talk about that a little bit later. Go over some trades over here. Can't forget about Oxy. Never forget about Oxy, man. I'll pin that to the top for those of you guys that are interested that aren't in there with us yet. But let's pull up the charts over here. Oops. That was not what I wanted to do. Let me see. Here we go. So we got SPY up here. Look at what the overall market's looking like on the daily right here. So this is SPY. We just made a new 52-week low, which doesn't really look like we did, but we did. So they can screw off with this nonsense. 360.88, and we came down to this previous level right here at, let's see, basically 362. So we have made these new lows. Now, it didn't hold for very long. And if you look at, let me pull this up over here. This one. And if you look at the SPY on the daily over here with the RSI, it's cooked, man. I mean, this is cooked to the downside. I would not be surprised if we saw a little bit of a relief bounce and we ended up finally getting that relief bounce back up to 370-250. We do need a retest. 1, 2, 3, 4, 5, 6 days in the red here. That's not good. That you typically are not going to see 6 days in a row in the market being like dirty red. That trend, I mean, if you look back, we were looking at this, that has not happened very often. So we are due for a little bit of a bounce. I mean, you can have these continued sell-offs down here, but we're due for a little bounce. Now, if you look at this on the weekly time frame, though, this is not good. Closing down below the 200 EMA on the weekly this week, opening up this week under the 200 EMA, not a good sign. In the past, when we've seen this happen, pandemic lows here, you saw a brief flash down below this 200 EMA with the taper tantrum. You saw a little bit of nonsense back here in 2016. I believe this is what, China? That would be my guess. January 16 was something with China. And then back down here, what was this? 2011. And then this is 08 back here. This slipped down below and we fall very significantly below this. The SPY was at $67. Oh my Lord. And then quantitative easing came about and then to the moon, the market goes, everybody making money. Tina. Not anymore. everything's sort of fucked here. But the other thing that we got to talk about here is housing. So if you look at this chart right here, this is the 20 city composite month over month change. This dates all the way back to 2012. We have not seen a decrease in home prices. This is anything above here. This is the percentage increase, month over month change. Haven't seen it since 2012. Home prices have been on the way up. Now, when you come back here in 2010, 2011, 2012, yeah, you're going to see a little bit of volatility here coming off the real estate crisis of '08. And then you started to see these big upticks in real estate coming back up. Now, first time in what, 10 years, 10 and a half years about that we've seen this type of movement in the real estate market. And it's not over. That's what you have to think about here too, that this type of movement is not done. You're still going to see interest rates coming up. Now, here's the thing that happened with home sales today. So you saw new homes. What was it? It was new home sales, right? I want to make sure I'm getting, let me see. I'm pretty sure it was new home sales. Yeah, new home sales came out at 10. They came in a lot higher than expected. So having new home sales coming in a lot higher spooks the market a little bit. When will Tesla get back down to June lows? Don, thanks for the super, buddy. I appreciate that. I don't know. I mean, Tesla, Apple, a couple of those other stocks have not reached their 52-week lows yet, which is kind of terrifying. Can we go over bonds? Yes. Natural gas price in its way to the moon for winter? It might, man. It might. Let's see. Oh, you guys are running it up on the likes tonight. I appreciate that, team. These markets are teasing us. Nah, these markets are great, man. These markets are great. But yeah, that's what's going on with the real estate market here too. You also saw, this is about to get nutty here. Russia will likely propose that OPEC Plus reduce output by around 1 million BPD at next meeting. Source familiar with Russian thinking. Okay. So you have less oil output in a time where it's hard to get your hands on oil at decent prices, even with oil coming down pretty significantly recently. And they're going to continue to cut that output, most likely screwing around with things. You also have the United States messing around with oil prices too with the SPR. They're trying to buy oil at 80 to what do you call it? To replenish the strategic petroleum reserves. That's what the SPR stands for. Can we go over bonds? Apparently I'm dumb. I always thought they go burr when the market is poor. Depends. So here's what we're looking at right here with the bond market that people don't seem to grasp, which I don't understand why people don't get this. Like people are like, oh yeah, bonds down. That's good. No, this is a really niche situation in the market where things are going wild. When you see the equity market and the bond market both get fucking mollywopped, do you know what that means? It means that people are flying to cash. It means they're not willing to put money into markets right now. That's what it means. It doesn't mean that, oh, yeah, money's about to come back into the market. No, it's not what it means. Because usually you can look at yields in bond prices as the flow of money between equity and, which is like the stock market and the bond market. They're typically supposed to be a little bit inverse. They're not right now. Is that why the dollar is ripping? There's a lot of different reasons why the dollar is ripping. One, you have the deflationary pressures. You have foreign exchange rates going out of control. You have, again, the situation with the bond market. We can do a whole video about why the dollar's been going up the way that it is, and even just technically the dollar is just absolutely pumping. But that's, when you look at the bond market right now, it's not healthy. Like looking at these giant moves, bond yields and bonds in general are not supposed to move this much. This is on the monthly time frame. So when you look at this chart here and this thing just goes on a moon mission, this was from April of 2020. The 10-year treasury was at 0.5%. It's at 3.94. Remember when we were talking about that Cathie Wood stuff this morning in the private stream where she was what was she saying? She was basically, yeah, Cathie Wood had great explanations. Not really. We'll go over this again right now. Let me pull up what Cathie said and kind of go through my thoughts on that. Basically, she said, screw you, Fed, you're tanking my investments. That's essentially what she said. But in general, we have not been this high in terms of treasury yields, like 10-year treasury, since 2010. So Tina is dead. So here's what Cathie Wood said, everybody. So the yield curve suggests that U.S. monetary policy has not been this restrictive since the 80s. As measured by the 2-year treasury yield relative to the 10-year, it is inverted 50 basis points, and the 10-year yield at 3.75 compared to the 2-year at 4.25. Fair point there, Cathie. Here's where she starts to kind of go off the rails. In ARK Invest view, US monetary policy is significantly more restrictive than the 80s when, to kill inflation, Fed Chair Volcker pushed the Fed funds rate up twofold. This is the thing right here, 2x. She's looking at a multiple, 10x to 20 or 10% to 20%. Chair Powell and his team have increased it 13-fold from 0.25% to 3.25%. But what she fails to realize is that it's really the percent, the actual nominal amount that matters, not the multiple that you're bringing the Fed funds rate up. It's like, Kathy, come on. That's your cherry picking data here. Here's where she goes a little bit further. Under Volcker, the increase in the long treasury yields was 1.6x from 10% to 16% compared to 7.4x from 0.5% to 3.7x under Powell and the team. But again, the yields have been selling off for years. They were bound to come back up at some point. You can't have the 10-year treasury yields just go to zero. That's not going to happen. Risk aversion is pummeling all assets except cash. She's right on that one. They're flying out of bonds and the stock market going cash. But the Fed seems fixated on hiking rates another 100 basis points to protect its legacy. Meanwhile, commodity prices measured by Refinitiv CRB index have dropped 42% since their peak mid-2008, 25% since their lower peak in 2011, and 19% since an even lower peak earlier this year. A 58% increase in I think this was the nonsense they were looking at. By the time the Fed has tackled the current surge, inflation has been brewing for 15 months, not 15 years. Now it's, quote, keeping at it with a sledgehammer 13 times more powerful than the one Volcker wielded in the 80s. In so doing, the Fed can undermine its legacy. Basically, what Kathy is saying is similar to what we've been talking about. She's just talking her own book. That's the problem. Kathy's just talking her book. She's saying, fuck you, Jerome Powell. You made me close down some of my what do you call it? My ETFs because I was heavy long on growth. Right now is not the time to be long on growth. Right now, honestly, is the time to be a short-term trader and be in cash. That's what makes sense. Will the Nord Stream leak cause a spike in price for natural gas? Probably. Her data discrepancy was very fascinating. Yeah, we were reading that this morning, and I was like, Kathy, what? Like, stop. That'd be like me saying, like, I don't even know. It's just like cherry picking the data to make it look good on my side and make the Fed look bad. That's what it looked like with Kathy Wood this morning. It was like, Kathy, all you had to do was just not be balls deep in growth. Fed raising rates, not good for growth. It's obvious. Kathy's a smart cookie, which is a fucking stupid statement. I don't know why I phrased it that way. But that she's smart. I don't know what she's doing there. Do you think we had all-time highs on the SPY by the end of the year? Fuck no, I don't. Sorry. Why would we? What's the light at the end of the tunnel? Okay, this is the only way that you could see that happen. We have the soft landing. So no, that's water. We have the soft landing, which is basically we're playing a game of operation with the market right now, if that makes sense. The Fed is literally trying to not hit either side by raising too much or stopping too early. The problem is that they're going into this whole situation blind because they can't see what the data actually looks like now in any accurate projection going forward because they don't know how the rate hikes now are going to affect things 6 months down the road. And they're going to continue to hike rates and hope that the previous rate hikes are going to push things down. And the ones that they're doing now are going to show in the data 6 months from now. So the only way, dude, all-time highs is no, absolutely not. That you would have to. I honestly think Stanley Druckenmiller has a point where he says that the market could drop around for 10 years. The reason being is because the Fed is most likely going to go too far because of what we just said with the data. Okay, what are they going to do? They're going into the situation blind. If they started raising earlier and they just did 25, 25, 25, 25, 25 the entire time, we probably would have been fine. That's soft landing. But they went 25, 50, 75, 75, maybe 175. It's like, notice the short interest from institutions towards the market. Yeah, I mean, I don't really look at that all that much. I'll look at cumulative market delta. So just looking at the overall exposure to the downside in the derivatives market, then what's the lowest we can go? 320. I could see 315. Next Fed meeting is in November, buddy. Next Fed meeting's in Nepal. What's up, man? Hope you're doing well too, buddy. Dude, having a great time over here. This market is so fun. I got myself in a little bit of trouble earlier today. I was a little early on these SPY puts when the SPY was messing around with the 200, and I was sitting there like, this is just nonsense. Like this makes no sense to be staying up like this. So you got this little nonsense pop coming back up here. I was kind of messing around with this, and then stop out, and then I hit this move all the way down. So it's fine. Choppy waters, dude. It's nuts. It's crazy, man. No way. 10 years. I'm saying two based on the ability to ramp out exports. I mean, you never know. Here's the problem. You've been in this QE period for 10 years. This is the issue. You've been in this like euphoria period in the market since the global financial crisis, the GFC back in 2008. He thinks the market's going to melt up instead of dropping because of the repo markets. I vehemently disagree, because you have to think about what institutional money is going to do. I don't think the repo markets are going to decide where we go. Are you invisible now? No, you are not invisible. And again, guys, if you wouldn't mind hitting that like button on the stream on your way in over here, helps out getting these streams out to a little bit more people. We got a lot of interesting stuff to cover over here. So the problem is that everybody, even if you're older, you've been desensitized to like what markets are supposed to be like. You can't be in this like, oh, let's have low rates and let things fly for 10 years and then have everybody be like, oh yeah, everything's fine. Seen a few of your videos, been digging the new background. Nepal, appreciate that, buddy. So think about it like this. You've had tech, SPY 350, baby. Oh, dude, I think it's going lower. I think it's going lower. So here's the way that I view the market right now. What big institutional money needs, you can see it right now. We've been talking about the flight to cash for months, man. Now you're starting to see it finally reflected in the bond market, which is the result of a few things. It's not just a flight to cash, but it does reflect people going to cash. You're seeing people out of the bond market right now until rates or yields get high enough where they just fly right into it and get that quote unquote risk-free rate. And they're also selling out of the equity market. You've seen like crazy amounts of outflows in the overall equity market in the last 3 months. Okay, so you have all this money sitting on the sideline. Goldman, this is the other thing that we can talk about too. Goldman is probably flush with cash right now. They closed down their $9 billion fund. They probably have a bunch of that cash. And they've also been dumping on the market because it was supportive, meaning people were still buying since Q2 of last year. Morgan's been doing the same thing. Same thing with JP Morgan. Like they're all doing the same thing. So this leads us to the point of you're about to get a great HELOC. Careful if it's adjustable. Because if rates go up, your HELOC adjusts up too. There might be a cap on it, but I'd look into that. But here's where it is. Fucking Jesus. Please don't. I was just telling you guys about the HELOCs, dude. About how the home equity line of credits were like reaching like crazy highs. And I was like, those are adjustable, right? I was like, you do realize that people are taking out adjustable rate loans with rates skyrocketing. Can we chill the fuck out, please? Can we not take out adjustable rate loans right now with rates 100% about to go up? Your home value of your home most likely about to go down too. Can we not lever ourselves to the tits? All right, please. Thank you. All right, let's get back on track. So where were we? A lot of cash on the sidelines. What do they need to come back in? Okay, so they need a light at the end of the tunnel. They basically need guidance. They basically need the Fed to regain its credibility. So they have to push it really far one way for people to understand that the Fed isn't fucking around. And then once the people, like the overall population and large money institutions, have their faith back in the Fed to get the situation under control, the Fed can then come out with guidance and say, this is where we're going to take rates. This is where we're going to leave them. Then we'll start backing off. That's when the market booms. But it's a matter of when that happens. It could happen by the end of the year if things go really well, or it could happen in 2 years, 3 years. We don't know. That's the situation that we're in right now. So being long growth right now is not a great idea, in my opinion. I think personally, cash positions are king. Like with the people like to say cash is king. I think that's a really, really smart way to do it. And with if you do have cash laying around and you are taking advantage of these moves in the market right now, I mean, you're the real winner. I mean, our people, dude. I was looking through the gains channel today and I was like, you motherfuckers, you aren't leaving money for anybody else. So as a consumer, why not get the line when you can just hold the open account? Because, well, you're still paying on it. That's the problem. GTII? I have no idea what that is. What's GTII? I've seen people floating that around. What's this thing? Global Tech? OTC? Uh, Probably not, man. Oh, it's gas? No. 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 If we're gonna be trading oil and gas, we'll trade like Exxon. If you want to be fancy with it, trade some Oxy. I'm not messing around with this OTC crap. Sorry. That's how you get hurt. That's how you get hurt in this market. Oh my God, you guys are killing the like button tonight. I appreciate that, team. So here's another thing that I want to go over. The do you have a line of credit? So the $70 worth of line of credit? Well, it depends on how high the yields go. That's the problem. And if they then call it back, if your home price just goes like to the floor. We play real stocks. Dude, we crush it on the real stocks. I saw you guys over here doing it today. The other thing that I want to talk about that we talked about in the what do you call it? We talked about this. I think it was in the which stream was it? Which stream was this? I'm trying to think. Was this yesterday? We definitely talked about this in a stream. Ah, yes, I know where it is. So we're talking about. All right, here's what we're gonna go over. We're gonna make a full standalone video on this, but this is stuff that you guys need to understand when you're taking these short-term trades. So going off of what we were talking about, cash is king right now, and the play is actually short-term trading, which is kind of wild that is actually what, like, if you have the ability to take advantage of these short-term moves, then you're good to go in really any marketplace. But when you think about what the actual smart thing to do is, it's usually not like most people aren't able to take advantage of these moves. One, shout out to all the people that have been with us for a while and with our group. You guys are absolute fucking monsters. But usually people fuck it up when they're short-term trading. They just can't do it. So having that actually be the move right now, you guys having the tools to do so is really awesome. But here's what I want you guys to understand. If we look at some of these crosses here, again, this move on this cross right here is awesome. Even the only issue is that you have a little bit of this nonsense here. So we were talking about entry points, and this is something that I want you guys to understand. So this was yesterday's price action where SPY started to run up, it tops out up here, and then starts to make this move down. Now you get this cross right here, awesome. Now if you just look at this move down to these lows without this nonsense, amazing trade here. But if you guys are trading with a smaller portfolio, or if you just decide to be, sorry, a moron and trade contracts with zero time, then this move back up, this retest is stopping you out. So you guys have heard me talk a lot about retests and waiting for a confirmation of the move and how I really, really hate chasing. Loving the 1348 group for sure. Mark, I appreciate that, man. Yeah, you guys have been killing it. It's fucking crazy. Trader Joe's up what, like 39, 40%? I saw him hit 40% today, which is crazy. Next month, though, we also have some pretty interesting things coming for you guys. So get ready. But looking at this right here, you see this move down. You're getting this cross on this candle. Great. Can it continue just chopping its way down? Yeah, absolutely. But the market's already made a $4 move. That's pretty huge. So if you're using this 13 as an indication of, this is probably if you start to see closing candles above here and the trade starts to reverse back up here, that this 13 is kind of going to be your wall of no return. You see the closing candle and it reverses back up. You've got a decent distance from here to here. So this is what 366 all the way up to 366.92, about $1. If you're trading dailies, you're fucked. Now, if that's your level here and you see this move up and you start to take contracts up here in this level, let's just say you're getting them here if you're being slow. These moves tighten your stop. Waiting for the retest, it tightens your stop, because if you're using this area right here as where you're going to like basically say the trade is wrong and it starts to reverse on you, well, think about it. If you entered here versus here, you're down way less if you entered back up here on a retest versus here trying to chase the move down. And even on this, you get what? 366.75 all the way down to what? 365.35, $1.50 move. That's boom, scalp out. Even if you scaled out here and rode this move all the way down, you're still crushing it. But the entries are super important. You really need to preach more about buying further out contracts. That was a game changer for me to make money and not get wrecked by theta. Dude, I literally scream it from the rooftops every single day that you guys should be getting contracts with more time on them. Let's see. Hold on 1 second here. I really struggled to take the move before it broke the 200. When it did, I took a small trade, but I got way too early. I have issues with riding green trades. Knifey today. That's what you're looking at today. Yeah, this move was interesting. So this move here, I got a little chopped up in here today, and then I murdered it on the way down. I mean, I hit this one, and then I tried to get a re-entry over here on this rim, and I got stopped out. It happens. But that 200 EMA was a bitch today, man. That did not want to break, and once it finally did, it was done. So, I mean, again, same difference here. If you're waiting for this retest up here versus trying to chase it to the downside, same deal. Let's say you're chasing it right here. This is the same thing. You could use the 200 as your level, but again, you can watch this 5-minute rim. Well, you're getting stopped out here, right around the 48, versus riding this all the way up here and taking a bigger loss. And again, you're watching these key levels here too. So that 200 EMA is going to serve as a dynamic level. It breaks that death candle. Did I see Powell talking about digital currency? I didn't. Did he say anything crazy? I was surprised this morning when I learned not everyone waits for a retest before entering a trade. Yeah, I know, man. Taking a Tito shot, family. I appreciate that, buddy. I'll see you tomorrow. Let's see. Are you going to be in the live stream tomorrow, buddy? Let's see. The month out contracts have no volume. That's not true. Does volume pick up as the expiration date nears? Well, sort of. It depends what stock you're trading. If you're trading like something that's like dog shit, like around $10 with like a contract that's not actually a monthly expiration, then yeah, it's going to have no volume. Let's say you're going to trade something like what would be a good example of this? I mean, Lucid might be, honestly. Lucid could do it. I mean, what's that Lucid at? 14? Okay, cool. So you look at Lucid here. If you look at the November contracts, they have all right volume here, decent spreads, and high open interest. This is the monthly. It's not going to do it for me. But yeah, it is. So then you go for this November 4th, no volume, no open interest. So technically, this has a month of time, but it's not a monthly. It's still quote unquote a weekly expiration. So these contracts that are labeled as the monthly period, the monthly options expiration period, are going to have more volume and open interest. Jamie Dimon, the CEO of JP Morgan, is in the chat right now. What's up, man? How you doing? Are you going to confuse yourself by learning how to draw trend lines? Because obviously we don't do that with 1348. You technically already are you have the concepts of trend lines with rimming. It's just the trend line that you're using is the 13, if that makes sense. So the trend is actually the EMA instead of a line that you're drawing. I'll draw trend lines sometimes if I'm watching stuff. I'll use them, but it's not like what I'm gonna base my trading on. Again, guys, 1348 is the core of the things that we teach. It's not just, oh cool, cross buy. That's if you think that's crazy. This is a public live? Yes, sir, it is. So again, guys, if you wouldn't mind hitting that like button, dude, you guys might run it up to like 200-300 likes tonight. I appreciate that. You draw levels? Yeah, levels are incredibly important. I mean, Gabe and I talk about that all the time. Those levels, man, are so important in making sure that you know, one, where price could reject off of or where it could go once you're in a trade. But let's get some levels going for tomorrow. And make sure that you guys have everything you need to know going forward. We can do it on a couple of stocks here too. So we'll do it on SPY first, what we always like to do. So why does this say 360.69 on this daily here? It didn't go there. Stop. So we've got that 362.17. We can move this down a little bit to that more recent low. So that's probably what we're going to end up doing. Again, in the live stream that I did with you guys last night, which was a private one. Let's see. We were talking about those levels, and now I'm color coding them now. So let's kind of take a look at some of these levels here that we could draw out. So we're gonna have this one right here. Yeah, this is the double top. I mean, that's pretty important. This double top level, it's pretty close. I mean, we have this 372.73 level up here. We can draw this right here. We'll keep that one on here. I don't want to have too many levels. That's why I kind of took a lot of the levels off just to clean up the charts a little bit. So we'll leave it like this. So we'll have this level right here on the SPY from this bottom the previous day, right around this 363.20, where we did see price again fall through, come back up, retest, make these new lows. So a key level right here, and then we'll keep this double top level up here, and then the longer term level up here. Well, I'll tell for those of you guys that can't see, 370.42 ish, 370.39 for the shorter term level, and then when we look up here, 372.50. Any other side? Twitter will make you zoom out. Oh, I bet it will. Need a video on levels? I'm not sure I track levels. You my 6 cents voodoo. Nettie, you're doing great right now. I wouldn't overcomplicate it. Sometimes, yeah, it's all drawn on trading view too, Nettie. But Nettie has been absolutely every single time that I go look in the gains channel, Nettie's got like a 50+% gainer in there. And I'm like, Nettie, fucking save some money for the rest of us, huh? All right. Use daily 4-hour and 5-minute levels close to the price. Yeah. So I'll look for key levels. So what I'll do is I'll look for it on like the daily, the 4-hour for those longer term levels that we could see as being a little bit stronger. And those are going to be in green on my chart. This is literally just visually for me. It makes it easier for me to see. You guys have all these levels drawn out for you on TradingView with the charts that we give you guys. It just makes it easier for me personally to see when I click them and extend them and they're thin like that. That's you guys all have them anyway. I can draw them on the TradingView chart. I just don't want to cloud that chart. But then what I'll do is I'll look, the orange ones are going to be the 5-minute levels from the previous few days. So that's what I do. So I'll have an understanding of, okay, this is a recent level or this is a macro level that we need to look out for, if that makes sense. Oh, we got Diana in here, Black Betty, Jason. What's up, everybody? How we doing? How we doing? So I think Tesla would be an interesting one too. Tesla was moving very interestingly today. It was very strong with the overall market. Tessie, I actually haven't deleted a bunch of them. I don't think I probably still have a million of them. Yep. So let's do that right here. Let's actually mess around with Tesla right here on the 4-hour. We'll zoom this in. I hate that it does this post split. And we'll just delete all these, draw some new ones. And you guys will have all these on the TradingView chart too. We're just doing it manually so you guys can see it and have it make sense. Okay, so here's what we got. Longer term level on the 4-hour, right down here, 365 or 265.75. This little double bottom here. This bounce level recently we'll draw out on the 5-minute, and then we'll have this level up here. This little double top on the 4-hour as well. This big rejection up here. So we'll have those two. Make sure we lock them so our levels don't move all the way around. And then we'll move this down to the 5-minute here too and give us a couple of more levels here. So we're going to have this one down here. These So you could have one up here. You could have one down here. You could have one in the middle here. There's a lot of nonsense that you could see with Tesla here. We could draw them all out and have these 3 lines. You could have this up here. You could have this right here, and I'll call out all these price levels for you guys too, so it makes more sense. This one right here, and then I would put this one right here too. And again, Tesla, you almost want to have some of these tighter levels too, because this thing moves like a wild person. So playing it, keeping it tight is going to help you guys out a whole lot too. You took profits at 365, then re-entered on the SPY drop earlier. Should have been more like Netty and wrote it all the way down. You know what, Sam Lee? Be better. Didn't get to trade much today. Swamped at work, but still managed 2% on the portfolio. I mean, you guys are crushing it, man. Again, if you guys aren't in there with us, the link's at the top of the live chat. If you guys do want to come check it out. I mean, our algorithms, which are the best tools that retail investors have right now. What Trader Joe's up, 39, 40%. Pythagoras is crushing it. We have Invictus, the predictive algorithm on the 5-minute, the normal 1348 alerts, the live streams, the curriculum videos. The community is awesome. It's growing super fast. The amount of people in there that are learning and taking advantage of the opportunity of making money in this market right now and learning is insane. Like, it's really cool. I was talking about this the other day, seeing the progression of people who come in. You can tell when they're new, the types of questions that they're asking. And then once you see them start to develop, like they end up calling shit out that I don't see because I'm not looking at it, which is really cool. But yeah, you guys want to join us? Hop right in. Let's see. You need the prices for Tesla? Yeah. So 288.67 is going to be the top side level that we have here on the 5-minute, the top of today. The height of the previous day is going to be 284.22. And then the bottom of today, 277.45. And SUV will start watching your screen and copying your trades eventually. Not Sam. You do that to me, even though you can't even see them, which is weird. Let's see. You want to join, but it's expensive. Jason, you're already in there, buddy. You're already in there. Let's see. Portfolio up 15.24% on the day. Thanks, Vix. Jesus, you'll make the cost of the Discord in a single trade. Yeah, man. You guys are killing it, dude. Yeah, I mean, the learning in there is unmatched. Jason, stop causing problems. You called out the Affirm play the other morning for sure. Yeah, you did. Where's Cody? You hack my screen and share with Sam. That's mean. Shining Wiz in there too, killing it. I know you guys are doing great. I love to see it. But yeah, so that's what we have on Tesla. We can look at Apple here too. I don't think I've drawn much on Apple recently. I have a shitload of levels on Apple. See, this is what happens. This is what happens to me sometimes. If you just start drawing levels, every once in a while, I'll just delete them all and then redraw them. Because this is going to confuse you. So I like to keep it pretty simple, have only the key levels that I really need. So I'll go through, delete, delete, delete. And it doesn't matter that I'm deleting them here because if they're relevant to right now, I'll just draw them right back. We don't need these zones. Don't need this. Don't need that. Don't need that. Don't need that. Don't need that. Pepe, thanks for the super, buddy. Here's my mandatory super. Appreciate it, buddy. Appreciate it. All right. So let's take a look at this on the 4-hour really quickly. I like drawing these levels on the 4-hour recently. They've been pretty solid. So looking at this one right here, you're going to have this level down at right around 148.50, 148.42 right there. You're going to have this level up here, this level right here, and then you're going to have this level up here. So we got all three. We got 165, 165 basically flat. We've got 158.90-ish, 158, basically 158.75. And then we have 148, basically 148.42. That's kind of where we're looking on Apple there. Again, they don't need to be exact. Just having them out there as a little bit of a guide is going to give you an indication of where price can move to intraday. It gives you a nice little marker here. Now on the 5-minute, this thing's an absolute wild person. So here's what we'll do. 5-minute, we'll have this level right here, low of the day today. And we'll color code this just because I'm being a little, you know what? And then we'll have this level up here. And we'll just keep it broad on Apple, making it make sense. So you could have this one in here too, this one up here. So these would be levels that I would keep an eye on. I wouldn't necessarily draw them out because it'll cloud the chart a little bit. Trader Joe's short, dude. Trader Joe's an absolute monster too. Discord's totally worth it. The 9 separate trades today, 7 wins, 2 losses, and the losses were minimal. Nettie, I appreciate that. Yeah, I mean, all the people that are in there are the ones really, really having an awesome time with it, man. I mean, come in there if you guys are interested at making money in the market. Come check it out, man. We're really changing the game. We are setting the tone for pretty much everything happening in the space. Through algorithms and some of the other things that we have coming for you guys, it's really, really game changing. I mean, I don't know if you guys have ever seen trading algorithms come out that then go up 40% within the first year that they're up, but they're pretty insane, man. But going back to the SPY a little bit, I want to give you guys a little bit of a look of what we could see for tomorrow here. Again, with this sell-off and where the RSI is on the daily and the 4-hour, we are due for a little bit of a bounce. I mean, you could see this trend back up to this level here. You do have this double top right around 370.44. You saw it come up right around this level yesterday. It came right up to that level today, and both times rejected very significantly. First day couldn't get down below this level right here, this previous day low. And you can see how these levels are really, really strong. We had this level drawn out the day before. You knew that price was probably going to come down and stutter right around this 363.24. Okay, so then you run back up here today, you play it down to maybe this level, you see how price reacts. If it wants to bounce up really hard, nope, slip down, new low. I think it's great to learn the crossovers, but the levels are game changers to the crossovers. So it's a nice progression for learning the market. Yeah, exactly. I mean, it's so much more than just the crossovers. The thing is that there's a lot of people out there that like to be like, no, it's just crossovers. It's like, well, you're a moron. You have no idea what we're actually doing here. So if you guys are interested in seeing what it's all about, man, hop in with us. Let's see. We're so good that hedgies call us crime. Yeah. Jason, Jesus. Next progression entries. Yeah, I got you guys on that video coming out this week. Maybe I'll throw that out for you guys on Thursday. Maybe we won't do a late night, or I'll just throw it out after hours and let you guys have at it. What time is the news we are getting for tomorrow? That's another good thing we got to take a look at here too. Good call there. So Wednesday, Bostic at 8:35, pending home sales at 10, which is probably going to be a lot lower. Lot lower than expected. That would be my guess. And then Jerome Powell is delivering opening remarks at 10:15. Bowman is speaking at 11. Barkin is speaking at 11:30. And Fed Evans is speaking at 2. And I think Bullard is wrapped up in there somewhere. So tomorrow's crazy, man. So a lot of volatility tomorrow. The name of the game with volatility and crazy moves in the market is find a solid entry on a retest. If the trade goes up 5-10%, get out. Take your damn money. Compound those gains, man. I mean, if you're following the rules, $10 on a 10% trade is 1% on your account. So let's see. The transfer from LIBOR to SOFR occurred since 2008 that we had new law in the year. The counterparts might default potentially for college. I mean, that's the government, unless somebody is offloading them to somebody else to hold, but it's usually the government. I would maybe I can take a look at that. With how the market has been lately, would you agree any overnight trades are a little risky? Yes, 100%. So What I would do is there was a great opportunity when we were talking about that knife, or the top at 430 that we were looking at, that most likely top that we were gonna see at 430. Those predictives on the way down were filthy, dude. Like, front running those moves on the way down were nasty. So, again, the way that I would do it in terms of swings, is as follows. What I would do is that if you guys see predictives coming through, which are unbelievable to begin with especially with Pythagoras, I would confirm on the 5 minute, if that makes sense. So I would look for the 5 minute and still play with enough time so that you can at least be able to lock in some gains before the end of the day. That's what I would look for. But guys, I think that's going to wrap it up for tonight. If you guys wouldn't mind on your way out, hitting that like button helps out a whole lot, spreading these streams to some more people. What's your stop loss relative to your contract length? I mean, it's usually the same. It's usually, well, it's usually between 10 and 20%, depending on the size of the trade. Do you guys have tutorial videos once I join? Yeah. Yeah. There's like, I think there's like 17 curriculum videos right now teaching you everything you need to know. Yeah, there's a lot of stuff that we teach you guys, and we do those live streams every single day. You guys get access to me. What do you call it? From 8:45 to 9:30. We just go over all of your questions, everything you need to know, getting into the market for that day, and then we get into trading. But yeah, everything you need to know is in there once you're in there. But guys, that is going to be wrapping it up for tonight. I will see all of you guys in the stream with our group tomorrow at 8:45 a.m. Let's go hit some more nasty trades, man. 1348 gang for the win. Let's get it going. We have so many crazy things coming for you guys. I can't wait to share some more of that. But yeah, we're going to be doing these streams too every single night, Tuesday, Wednesday, Thursday. So yeah, I'll see you guys a little later. Hit that like button on the way out. Thanks for showing up tonight. I appreciate you guys. Hopefully you guys learned something. Other than that, peace.